Right, good evening, everyone. Thanks for joining us tonight. Tonight, we'll be sharing with you on the US market, more of an update. Me, Alan, and also my colleague Ming Jun will be sharing with you all on the US market overview. Throughout the webinar, if you have any question, you can just click on the Q&A button below and post your question throughout the webinar. And then we will answer at the end of the webinar. So here's the outline for tonight's webinar. On the first part, we will provide you some US market update, especially focus on post-FOMC rate cut and also the resurgence of the trade war. While the second part, we will intro you to some of the FANG stocks, basically on some basic introduction and also the technical analysis. So let's move on to the post-FOMC rate cut. On last month, 31st July, FOMC has announced this 25 basis points of cut to the range of 2% to 2.25%. As you all know, this is the first rate cut in 11 years since the 2008 crisis. The previous rate cut was on 16 December 2008 during the crisis time, was a 1% cut to the 0% to 0.25% range. So what did Fed say about this rate cut? They have stated that this was due to the muted inflation pressure. As comparing to their target of 2% inflation, the inflation ended June 2019 this year was only recorded at 1.6%. And the Fed also said that this is act as appropriate to sustain the current expansion and the economic growth. During the last week release of the minutes of this meeting, the Fed again stated and emphasized that this is only a mid-cycle adjustment instead of a long rate cutting cycle. So it's to rule out the preset cost of the following upcoming rate cut. However, what did Donald Trump say after that? During the interview by the press, Donald Trump has stated that he actually expect or wanted at least a full percentage point of cut, which is a 1% cut. And also he wanted a weaker currency. Further, besides that, Trump also said the GDP should have grown more than 4%, and the Dow Jones Index should have 10,000 points higher if Fed did their job correctly. So it's sort of threatening Powell's job and quoted that Fed is not doing their job well. So what is the market reaction after the rate cut on that day itself? The Dow Jones, S&P, and Nasdaq, all three are fell more than 1% at the closing. As you can see on the chart circled in the red box, during the announcement, the market actually shrink, all three index shrink more than 2%, all the way to the bottom. So theoretically, the market should actually shoot up after following the rate cut. However, why is actually a crash during that day of announcement? So we have come up with two possible reasons here. The first reason is that because this time is a widely expected rate cut, so the trader and investor has actually priced in all these effect prior to the announcement. And also the hawkish tone from FOMC statement where they state this will be only a mid-cycle adjustment is a one-time adjustment instead of a long rate cutting adjustment. So currently, what is the market consensus in the upcoming September meeting? So in the upcoming September meeting, actually the trader and investor, as we can see on this Fed Watch tool, more than 99.6% actually favor in for another 25 basis point cut in the upcoming meeting, while the rest of 0.4% actually favor for 50 basis point cut. So there's no one actually expecting the rate to stay at this rate. Other than the rate cut, now we will move on to the trade war. So as we spoke in the previous webinar, the trade war actually has, the tension has eased. When everyone thinks that things are going back on track, during the end June, the post-G20 trade talk, they actually have agreed to delaying the new tariff and lifting the ban on Huawei. And further on, Trump also said that they will be exempting a list of goods from the initial 25% tariff. During the Shanghai trade talk, although there only a little progress made, but China actually commit to purchase the agricultural product from the US. So when everyone thinks that things actually is going to the good way, but in this month, August, after the FOMC rate cut announcement, these things happen and a lot of noise actually coming out in August. So firstly, on the 1st August, Trump suddenly announced a new tariff imposed is a 10% on all the remaining 300 billion goods during his interview with the press. Following on the Monday, 5th August, the China side actually allowed the devaluation of the Chinese yuan and also announced to suspend the purchase of all the agricultural products. In the mid-August, China again retaliate on 75 billion US dollar of goods, and the US side revert with a threaten to hike the tariff. So what happened on all these announcements? As you can see on the chart on the table, on 5th August is the Chinese yuan actually sunk to $7, 7 yuan per dollar. It's the lowest in 11 years. In the past 11 years, it never crossed this level. So it sort of allowed the devaluation all the way to cross the history low. On the 14th August, the market tanked again, but this time around is due to the yield curve inverted. It's a 2 years versus 10 years curve inverted. That means the 2 years rate is actually higher than the 10 years rate. On the 23rd August, which is China retaliate with the tariff on the US dollars 75 billion of goods, while US actually reply with a threaten to further hike the tariff. So we can see on all these 3 specific days, the market actually tanked close to 3% for all 3 indexes. So this is the S&P 500 chart, and in the all 3 circle, we are actually showing you the chart on the 5th August, on 14th August, and also on the 20th August. So these 3 are the biggest movement and swing in this month. So given all these noise and also volatility in the market, I believe our investor would very interested to know what we can do in this type of market. So definitely safe haven, gold is a good choice. We have talked about it previously in our webinar, and gold is actually now hovering above 1,005 per ounce. Last time we also talked about some of the gold investment, and this time around we will introduce you some alternative on the gold royalty company, gold royalty investment. It's different to the traditional gold investment, where they actually provide upfront funding to the gold miner, and then they will receive a royalty in the future as long as there is a gold production. So some of the company listed in US, FNB, SAND, and also OR. All these 3 are the gold royalty companies listed in US. Well, regarding to a trade war, very obviously what we can do is we would like to try to avoid the company that derive revenue mainly from the China side. So for example, Starbucks, they have actually quoted that their key business expansion will be focused on the China. Currently, they are opening 1 new store every 15 hours in China, and they plan to double from the current 3,900 stores to about 7,000 over in 5 years' time. The other sector that you would like to avoid is the chip makers like Nvidia, Intel, Broadcom. All these are due to the export sanction to the Chinese company like Huawei and ZTE. Trump actually warned this company not to export to the Chinese company to avoid leak of the technology. So for company like Broadcom, they actually derive 50% of their revenue from China side. So this will heavily impacted their business. So we have looked into what to avoid. So we would like to also look what to invest in. So we will definitely look into the company that are not affected by the trade war. So this company listed here are mostly generate their revenue from the US. Wells Fargo is a so-called local bank in the US. They are the 4th largest bank in the US by asset, just behind JP Morgan, Bank of America, and Citibank. For Dollar General, is a variety store that's selling some essential stuff. They are like Walmart, however, their strategy is different. They go wherever Walmart didn't go. So mainly targeting the rural area. They have currently owned more than 15,000 stores in the US. The next one will be talk about the telco, AT&T and Verizon. So telco are commonly known as a defensive sector, and same for other companies. These 2 companies also derive their revenue mainly from the US side. So the summary of these 2 recent events, FOMC rate cut. So we have some hockey stone from the FOMC. However, we also noted that they state the door for rate cut is still remain open. So they will still adjust the rate accordingly to the market condition. And the market generally is still expecting a further cut. While for the trade war, we have seen the tension actually re-escalated, and the market is not expecting any deal coming soon, even though they are agreed to talk over this weekend. And recession may hit if there's any further escalation within these two big countries. Okay, so we have reached the first half of the webinar. If you have any question, you can click on this Q&A button at the bottom and then post your question, and then we will pick some question to answer at the end of this presentation. Okay, before we go into introduce you some new features, we have launched a poll for you to do. So this poll is regarding investing in US. What is the issue that concerning you the most? So it's on China trade war, government debt, election, or the inverted yield curve. Okay, next we will introduce you some of the new feature that we have implement on the platform. Usually or traditionally, we have only limit order and stop limit order. But so in the first half of this year, we have launched a new market order for clients who need to trade and need to execute fast in the market. We have introduced market open, market on close, and also market order during the trading hours. So why we want to use market order is because some investors, they need immediate execution. So market order will guarantee you the order done as long as there is a sufficient volume. And for clients who like to get out the market immediately, you can also use market order to execute your order. The next one is a $8.8 promotion for the US intraday trade. This is a offer for only the prepaid account. And if you do a contra within the day, you will get some rebate on this brokerage. So if you like to know more, you can contact your TR for the information on the prepaid account. Okay, next we will move on to the second part. The second part is we will be talking on the FANG stock. So I believe most of the investors already know what is the FANG. So FANG is basically the five most popular tech stock in the US market. They are Facebook, Amazon, Apple, Netflix, and Google. So let's have a quick look at the FANG stock. The first column is showing the closing price on 26th, which is Monday. And the second column is showing you the PE ratio of all these five companies. And the third column showing you the year-to-date return. That means from January until now, the return. And the last two columns showing you the analyst buy cost and also the consensus target price. So you can take a look on this table. There are all five stocks have actually very high PE ratio and no dividend given except Apple shares. Besides that, the consensus target price actually more than 20% from current price except Apple as well. For your information, the S&P 500 PE ratio is currently stand at 18.85 and the year-to-date return is 14.82. So you can see that actually other than Apple, right, all the companies have higher PE than the S&P 500. So this is some interesting fact for you to know that this is the top 10 largest company by market cap in the world. You can see all the 10 companies, 9 are listed in US except Tencent is listed in Hong Kong. And then 7 out of 10 companies are all tech companies. And very interesting, the FANG stock, 4 of them are actually listed, ranked from the 2nd to the 5th, Amazon, Apple, Alphabet, and Facebook. While for Alphabet, Google, there's another ticker they are trading is GOOG, is the B shares. GOOGL is the A shares. So for A shares, they have a voting right, while B shares, they have no voting right, but the price is about the same. For Berkshire Hathaway, you may want to take note as well, because for this BRK.A is an A share that are currently priced at over 300,000 per share. So this stock is will never split, while for the B shares, they may split in the future and they currently price about $200 over to $300 per share. So why we introduce you this FANG stock? As you can see, there are all the very popular brands and also have a very massive user base. For example, when you think of want to search for some information, what you will do? You won't be telling your friends or to search on internet. You will say you Google it. So everyone know that Google has already become a term of searching information. And all these 5 companies are actually tech companies, so they are working on improving of our future lifestyle. For example, Facebook and Google, they are working on artificial intelligence. All these companies are actually built up based on some big data. So this data will be used to improve our future lifestyle, to improve our behavior. So the popularity actually means also more investors will be aware and trade the stock, and they will also result in more analyst coverage. So for all these 5 companies, right, they are averagely have about 40 to 50 analysts covering on their stock. While for other companies like General Electric, like CT, they are average about have 20 to 30 coverage only. So they have about double the size of the analyst covering. So this will generate more interest among the investor as well. While for the futuristic, when they have improving their business, this also means they will grow in future and expand their business in the future as well. So for the FANG stock is always consistently on the top traded list of the US stocks. Okay, next my colleague Ming Jun will be sharing with you on the technical chart on FANG.
Okay, thank you to Alan for the updates on the US market. Right now, I'll proceed on to the technical chart. Just give me a moment while I load the technical chart. Okay, so I'll be mainly going through on 3 counters. Basically, the first one will be on Facebook, as you can see on the screen here. Okay, so right now, I mean, if you guys have been using technical analysis, it's a very good way to actually time your entries and exits. And also, to me, technical analysis is actually a very good way. It's actually it's more of an art rather than a science, and depends on how you look at it. Okay, for today, I'll be sharing with you some indicators and the tools that I personally use to actually study on the technical analysis of these counters. Okay, so the most basic one that we have here are trend lines and support and resistance. Right now, you can see from the chart that I've actually drawn this channel and also this line here. Okay, so usually when I do my TA, right, I will start with a longer timeline. Right now, what you are seeing here is actually a 3 years time frame. Okay, so all the way back to 2016. Okay, but you look at the past 2 years, we have some huge movements with these stocks. Okay, so the near term wise, within the past 1 year, 1.5 years thereabout, we are looking at this channel. Okay, that I've drawn. So basically, we can identify that this may be a possible support point from a trend line perspective, and also a longer time frame kind of support. We are looking at about $160 kind of level. Okay, and moving on to indicators that I will be sharing with you today, will be the exponential moving averages and also the relative strength index. Okay. Okay, by the way, this is the Poems Mercury platform that we have, which is a dedicated platform that you can download. And these charting tools is more comprehensive as compared to the Poems 2.0 platform. You may want to explore this platform, and if you have any queries on how to actually use it, you can consult your trading rep for more information. Okay, right now, exponential moving average, there's also a 20 days and a 50 days. Basically, it's a weighted moving average that gives more weighting to the recent price data. Actually, it smoothens out the price movement, and you can see they check based on the 20-day and 50-day. Now move into the 1 year that you can see here. Okay, so basically how you read it is the crossing up and crossing down. Once the 20-day crosses the 50-day, it implies that there's actually a change in the trend. So if the 50-day is above the 20-day, it basically signals a downtrend. If it's above the 20-day is above the 50-day, it signals an uptrend. While these kind of junctions, it actually proves inconclusive. So sometimes you may have to look at other indicators to help with the study. Okay, the next one that I'm sharing with you is your relative strength index, the RSI. Okay, so it's basically a momentum indicator that measures the magnitude of recent price changes. So it shows you where are the overbought and oversold levels in for the past 1 year. Okay, so traditionally, the interpretation of this RSI is actually for values above 70, it will be considered as an overbought situation. Basically, it's actually overvalued. And then there may be chances or likelihood that there will be a trend reversal or pullback. And for RSI reading of 30, we are looking at oversold situation or undervalued situation. Okay, so yeah, so that's how you read the RSI level. So you can see from this chart that we have here, it's close to the RSI 30 level, but it's actually not at that level. So what we are looking out for is mainly those that has crossed it, as you can see here. Okay, it is actually quite accurate in the sense that it actually corresponds with the trend line that I drew over here. Okay, usually people say that trend line has to be point to point, but sometimes people draw trend lines with a channel or with a rough, trying to put it into perspective as to the overall, try to fit into it. Okay, so RSI here actually signals an oversold situation on this day itself, and true enough, it actually rebounded afterwards. Okay, but right now, the situation is a little bit more complicated with the trade war situation, but of course, this will come with the fundamental analysis of these counters that to help you to make the correct decision. Okay, so I will go on to share with you on the two more charts, which is on Apple. Let me just like that. Okay, you can actually just click on here to see on your charts. Okay, the same thing, what I'm going to do is I'm going to look out for a 3-year time horizon, a longer time perspective first, to look out for any major trends in the market. Okay, I'll close out the indicators here. Okay, right now, for the near term, or rather for the past 1 year, what I can see is that maybe a trend line over here. Okay, so I'm connecting these 2 points at these 2 low points, and it's actually showing me an uptrend. Okay, basically you can see that we are not nearing the uptrend. Basically, what we are looking out for is actually for the price level to hit the trend line to consider a buy. Okay. And also the near-term resistance level that I drew over here is about a 215 to 220 level that you may look to see if there's any price action. So Apple actually topped way back in last year, December, before it actually tanked following the whole December action. Okay, and it actually failed to reach that high ever since. Wow. Other counters actually had broken those highs. So you may find that these levels will be much more difficult to break in the near term. So look into that. And then now for the moving averages, you can actually put into perspective and also look at the RSI here. Okay, so now I zoom into the 1-year level. Okay, just give me a moment now. Let this thing go in. Okay, so basically the trend here, there's an uptrend. Okay, but it fails to break these 215, 216 level that I was referring to just now. Sorry, we're trying to wait for this thing to go back in. Okay, but anyway, yes, so the price didn't touch this trend line ever since. So we are looking for any actions to reach this. But of course, you don't have to immediately buy it when it's on a trend line. You still have to look out for to see if there's any fundamental reasons or fundamental or any news that is causing such movements. Okay, you can also see RSI here is actually proving inconclusive at the moment. So we will look into buying near the oversold position, and of course exiting near the overbought position. Okay. So last but not least, I'll share on Google. Okay, back to the same thing. I'm looking at 3 years, and also I will be taking off these indicators first. Okay. So back in 2016, the price was actually only at 600 plus, and right now for the past 2 years, we are looking at actually quite a sideways kind of trading for Google. You can see the highs are actually back in April this year at close to the 1,300 level, which is also found in July of last year. Okay, but both time it didn't break the 1,300 level, so we expect this 1250 to 1,300 level to be a very strong resistance. Okay, so let me just wait for okay, so right now we are in the middle. Okay, there's actually trend lines that can be drawn, but I believe these support and resistance points are likely going to be strong. Okay, the resistance here, you can see the third time it touches, it fails to break through again. And the support of $1,000 just nice, also a round figure, which investors usually take into account for, is also held strongly. In fact, it's a resistance over here, which turns into a support. Many times it came over and it bounced back. I think about 6 times, 7 times that it reaches around that level. Okay, I'm not talking about the exact dollar value, $1,000, but I'm talking maybe a range of $10, $20 within that range. So it may break that result. I mean, it may have a false break that will fall below 1,000, like for this instance, but actually it's still considered at $1,000 level. Okay, in fact, let's zoom in. Okay, and I will key in the indicators here for you. Okay, so right now it crosses up. This one I believe was due to the results released. Okay, but again RSI is proving inconclusive. Okay, with the trade war news happen over the last week. Okay, you can see some movement here, but not anything dramatic enough. Okay, in fact I can also still draw a trend line over here. Let me see if I can draw a trend line. Okay, there's sort of a trend line right here. So it will be seen if this can be supported. This trend line can be supported in the near term. If it can be, then we are looking at heading back to the 1,250 level. Okay. So that comes to the end of my TA sharing, technical analysis sharing. And okay, so I'll also be sharing with you educational sources which you can actually find more information on our journal, our articles that our dealers and also our research that writes them. Okay, one of it is the Poems Market Journal. Just give me a moment. Let me switch back to the screen. Okay, so right here you can see there's 2 websites available, which is one is the Stocks BNB, and the other one is the Poems Market Journal. Poems Market Journal, which I will share with you live on the website itself. Oops. Okay, so this is the page where you can see under Education Market Journal in the Poems homepage. Okay, we have quite a lot of articles here which you can go through. And like recently just uploaded yesterday was Alan's own article on investing in Canada market. Okay, there's also YouTube videos on market watch like yield curve inversion, where Alan also shared on, which you can find more details on. Okay, so it's quite informative and you can actually definitely find more information. So if you need further clarification on the articles, you can also approach your trading rep for more information. Okay, so these are our contact. Basically, the night desk has 4 dealers, and this is the contact number. Okay, and that is all for our presentation. We will proceed to move on to our Q&A session. Okay, so we will now start to answer some of your questions, but please just give us 1 to 2 minutes to actually go through the questions. And meanwhile, there's also a poll that I'll be sharing. Okay, it's about, I just shared a poll on materials. Which materials do you actually think will best assist you in your US investments? So maybe you can share that with us, and probably we can include some of those in the next webinar that we will be having. So right now we have a question on why is Starbucks price keep going up if China is the key in their business expansion? Okay, we'll have Alan to answer that question for you.
Okay, for this question, it's because currently the Starbucks is still haven't really impacted by the trade war. They are still expanding. However, do know that we actually know that they have actually expanded slower compared to previously how they expand in China. And also, if the trade war really escalated, we can't rule out that the nationalism and patriotism might kick in, where the Chinese consumer actually will boycott all these American brands like McDonald's, KFC, and Starbucks. They will definitely take a hit, and the government may also make them very difficult to open up new stores and expand their business. So all this will actually impact their business in the future if, let's say, the trade war really escalated.
Okay, the next question that we have here is, aside from trade war concerns, how is the US economy, and what is the house view on US GDP for the second half?
Okay, by looking at the economic data for US, we see that the data are still very healthy. The economy is still looking good fundamentally. You can see the non-farm payroll are still beating the estimate most of the months. The unemployment rate are still very low. The consumer confidence are still high, and the inflation actually still at the target rate. It's not above, it's not way below. So the growth is still definitely there. Just that the GDP growth may not as good as what the Donald Trump want, but it still will be a decent growth for US in the second half.
Okay, the next question that we have here would be, why do Trump actually wants a weaker US dollar?
Okay, so for weaker currency, right, a very direct impact is that it will definitely cause your import to be more expensive, but the export becomes cheaper. So here we can see that what Trump wants is actually a trade surplus instead of the deficit currently, so that the US manufacturer can compete with the global market. Global market can export their products, and also more jobs will be created in view of more export, so that Trump can actually keep US economy itself moving instead of keep being deficit and help other countries.
Okay, and right now there's also a question on the Mercury platform. Is it free to use? Yes, it is 100% free to use. You can download, and the charting software is definitely better than the Poem's 2.0 platform on the browser. Okay. Okay, the next question right now, we will answer about another 2 to 3 questions. And what is your view on the upcoming trade talk?
Okay, the two countries, their senior officer agreed to talk over this weekend before the new tariff imposed. However, the market doesn't see that any concrete deal will be discussed, will be agreed on this upcoming trade talk. Most of the market actually expecting the trade war will actually keep dragging on at least until the election next year. Because this is what Trump been doing since he's elected in 2016. The trade war was started back in 2017 and dragged until now all the way.
Okay, the next question that we have, I believe most of you thinks that gold price actually gone up quite a lot. So the question here is, can actually gold price still continue to go up?
Okay, the gold price is currently standing at more than 1,500 compared to when we conduct our webinar previous month has been up nearly 1,000. So given that the market is still expecting there's a further rate cut, definitely the gold price will still go up if there's more rate cut. Because once there is a rate cut, right, the most direct impact will be on the US dollar will be depreciate. So as gold is priced against US dollar, so once US dollar depreciate, the gold price will definitely go up. And then another reason to leverage on gold is also because of the uncertainty on the trade war. As the trade war escalated, the market will become very volatile. The market might just crash one day, and at this timing, the gold will outperforming the entire market.
Okay, so basically, there's also questions on technical analysis on other stocks. As the time is actually very short for this webinar. In the next session, is actually we are going to cover more on other counters, and also just other counters that we will be sharing with you on the technical analysis point of view. Okay, now we're looking through. We'll just take one last question. Okay, so basically, someone actually asked whether there is a US counter live price on Poems. You can, it's actually free for retail investors. You can subscribe to it in our Poems platform. For more details, you can actually consult your trading rep that you to ask on this live price is free for retail investors. Yeah. Okay, we'll look through it, the last few. Okay, the last question that we will be answering today will be on the opinion on the inverted yield curve, and also is recession coming in the near term?
Okay, in the market, inverted yield curve are widely known as a leading indicator for recession. It has largely predicted some of the past recession. However, generally, average, once the first inverted yield curve show up, about after 1.5 to 2 years time, the recession will come. So based on this year, earlier first half this year, and also recently the second yield curve inverted, so we could safely estimate that the recession probably will come as soon as 1.5 years later, and so on.
Okay, so that's the end of our webinar today. So we will be having this webinar every 2 weeks, and also at the month end. We will be sending you guys also the next webinar information, which you can sign up for, and we will hope to see you again in the next sessions. Thank you.